welcome to my lesson on the introduction of swing trading. My name is MessiahTheories. You can find me on Twitter with the same name where I do my best to update my plays as I go throughout the day. As you can see, I use the 76ers motto because it's fitting for swing trading. You have to trust the knowledge that you have that your trade will pan out just as you intended it to, hence the reasoning for be patient and trust the process. And just a quick run through of everything that we'll whip through today. I'm going to talk about everything that is going on my screen, the indicators that I use, a brief overview on how to use them, and a few of the patterns that I trust. After that, I'll walk you through some of the most recent plays that I had through about the past couple months, weeks, and maybe even as recent as a couple days. How to play them. We'll look at historical analysis on where you may have taken entry or an exit using daily and weekly charts. All right, we're going to jump right in here. The first thing you're going to notice is that I'm using thinkorswim as my broker platform. I think they offer the best charting service, easy to use, and just easy to look at as well. We'll go from the top. Daily time frame is what my main chart is going to be focusing on. You'll also notice that I'll switch between the weekly as well, but daily is going to give you the good idea of what's going to be doing for the next couple days, maybe couple weeks. Over here, I use a 5-minute, 1-minute chart as well. I am going to be plotting my entries, exits on here. I also like using a MACD for entry and exits as well. It kind of gives you a little bit more confirmation upon those as well. Next thing down here is going to be the MACD and TTM together. We can go over those later. The RSI is going to be big for me. It's one of my main things that I trade off of. And then volume analysis down here as well. I use level 2 off to the right here. Time and sales is going to be all right here. News is going to be here as well. I'll have multiple watch lists on multiple monitors throughout this side right here. You'll notice up here that I have a banner. I call it the auto SMAs. It's going to have the 13, the 20, the 50, the 100, 200. I also have the banner including the RSI and volume on here as well, just for quick reference. You'll notice that not every color is plotted on here onto the chart, is onto the banner. I use an orange line, which is going to be my 10 EMA. You can use anything from an 8 to a 13, which should give you basically the same thing. My blue line down here is going to be a 34 EMA. You'll notice that it's pretty well respected, widely used by most people as well. So I use those as well. So I have SMAs and EMAs. I know some people like to say only use an SMA, only use an EMA. Why not use both? That way you can see that they're actually playing off of each other. It's all depends on who's buying where and who's selling where that day and how they're playing off of it. So next thing we'll talk about too as well is just the basic chart patterns going into things. We'll talk about the indicators. We'll talk about a few of the plays that we were going over. But we covered up everything that you're seeing on the screen. There's not too much else that's to it. If you can set up your screen to look similar to this, you're going to be trading like me. You're going to be using the same indicators like me. You're going to get the overall feel of that as well. It's not going to be too many things that are different. All right, so let's jump into patterns here. If you followed me or if you've seen any of my plays, you'll notice that I hardly ever trade any penny stocks, and there's a good reason for it. I typically play mid to large caps. To me, and just my opinion, they're insanely easier to play compared to pennies. They're more predictable. They follow your indicators. Um, I wouldn't say to the T, but damn near close. They're going to be respected on most pattern breakouts, most pattern breakdowns. Support resistance levels are very clear just because of the way they look and they move. Here, let's just pull something up and show you. Netflix is a play. It's on a 52-week uptrend from $116 to now hitting 204 this year. It's just those are the types of plays that you want, and you see, and right here from July 19th, we'll call it, all the way over to October 6th, you have a perfect cup and handle formation and the breakout above that, which led to that 204 print there. Um, you don't get that types of movement on pennies. They're a lot of it is pump and dumps. There's going to be not as big as moose. It could just be a random person that just completely shuts down the ticker. Um, you don't get that on these large tickers like Netflix, like your Facebooks, like your Googles, like all those other mid to large cap stocks that just respect all your indicators, the things that you learn in textbooks, the things that you learned in your other YouTube videos. Um, they're just going to follow them to the T. And here's an example. I think someone else showed me this earlier of you try to play that chart and you each day it looks like there's a green day, red day, green day, red day, green day, red day, a random spike over here, probably based on news for no reason. Um, Everyone always says HMNY, you get rid of that little run up, this is what you get on it. And it's just mild little 2 day runs and then completely dumps on you. And there's somebody that buys up here at $5 and then all of a sudden the next day it's at $3. You just don't get those types of things as often with mid to large cap stocks. And that's why I highly advise people, you're only going to be able to take 10, you're only going to be able to take, maybe even one share of these bigger stocks to play, but they're going to be textbook to the point where you will know when to get in, you will know when to get out, you'll make a little bit of money, and it just continually builds up rather than buying here at $3.30 and 30 cents, and then the next day it's down to $2 and you just lost a ton of money because you spent 5,000 shares here thinking that this was going to make another run up to $5 based off of some chat room pump or whatever. Those are just not my type of plays. Those are the types of plays that you see people just go bankrupt on. There's a reason why people move on. They move on to bigger stocks, things that get them consistent money, though. It's not to say that you can't make money off penny stocks either, though, because there's a lot of great plays out there. Even the sub $1 plays that'll run up based off of textbook formations. It's just those types of things have a typical history of just retracing hard. You have a ton of shares that are in there already because it is so low cost that when this thing dumps, you tend to lose a lot of money on these types of plays. So let's jump into some of the recent plays that I had did. Um, RTN was one of them. Let's get rid of everything here, start clean. First thing you're going to notice is that it's going to be a 52-week uptrend. Basically means that anytime it dips, you feel kind of really comfortable buying any dip that there is just based off of what you're seeing there, knowing that it has a really good chance of just continuing going up. And that's just based on the eye view. Obviously, you don't want to ever do this just because it dipped. You just jump in. You want to make sure that your indicators are telling you, okay, this is going to go back up again. So as you're drawing these, I think I played it here on this drop. That was going to be on 1026. And as it dropped hard, I don't even remember the news. To me, news um, just kills my trades because I don't care for them. I want textbook breakouts. I want just strictly technical breakouts as well. If the news favors me, I'm all for it, and I'll be the first one to say that news is great. Otherwise, I don't like it. So as this dropped down on the 26th, this one popped up on my radar. The next day was still there. I'm still watching it. And then as this red day here on the 30th, that's when I really began to plot my trade as well. And we'll look that currently it's between two moving averages. I always tell everybody that I know never buy between two moving averages because there's no clear resistance or there's no clear support established there. If this was a 8 EMA or 10 EMA that was dropping down, you know that there's resistance that it needs to pop over, and that way it can just pop up from there. But you just don't know what it can do. You don't know if this continues all the way down to this white line, which is 100 SMA as well. But as I began to plot it, I began to look at my RSI. RSI is the first thing I'm going to look at. You'll notice that maybe your values and my values are different. I use a 69.1 as my, we'll call it in parentheses, overbought, and I'll use a 30.9 as my undersold area. These are values that I've learned from other people throughout the communities that I've been a part of, YouTube as well. Highly suggest you look into them because they are, um, I'm safe saying, insanely accurate. So as I notice this, this is coming all the way down to that sweet spot of this is either going to bounce off 30.9 or this is going to dump really hard underneath, and this is going to test the 100 SMA. As I noticed it touched it, I noticed that this was beginning to form a reversal, and I noticed my MACD was also beginning to curl as well. Now that's two indicators right there that I would have that says, okay, I need to put this on high watch. Um, as that MACD began to curl the next day, right here on the 30th, that's when I really began to consider a position. All of a sudden, it was respecting off that 30.9 and it never dipped below. So that right there is clear support for me. I know that, okay, I need to buy it eventually today or tomorrow. Volume was decreasing on that, so selling pressure was going down. And then you'll notice down here, based on the volume, we'll get to that later, that buying pressure was now beginning to come back in. So the next day on the 31st is when you get that green candle. I had bought in this day right here, and you'll notice that on your RSI, it is beginning to go up as well. Here we'll get rid of the MACD from here so we can see it day by day. And we'll go from here. So basically, you're gonna have to see it from the indicator points of this is what you're getting on the green day. And we'll even go back one more day. So that's what I'm seeing from a um, indicator standpoint. So that means the selling pressure is slowly dying off. It's finding support. It's bouncing off this 30.9 on the RSI. Your MACD is beginning to slow down a little bit and start to curl. You have a green day. You have a hammer there on the daily as well. And you're going to move a day forward now. I took entry because I believed that this bounce off 30.9 was going to be enough for me. And I got in because of the green day on that as well. And I noticed that the 52-week uptrend on that was super strong. The chances of recovery are going to be a lot higher. And so then we'll fast forward a day. You'll notice that the RSI continued to go up, even though you got a red day. The RSI is more, it needs to be seen as a pressure tool. As the RSI goes up, it doesn't matter what the chart is doing. It could be going down, it could be going sideways. If the RSI is going up for me, and it's staying the same, that just means that pressure is building and then this is going to pop up eventually as well. You'll notice the development of your MACD as well. It's beginning that curl even more. So you had a high that day of 181. I bought in, I believe, at like 179-ish. I don't have the exact numbers on me. And then we'll fast forward another day. We'll go, and then we got this huge spike. This is, I don't think there was any news associated with this spike as well. But you'll notice the huge little pop there as it put in a red day. Um, RSA just kept building, going. Your MACD is curling even farther when it comes to this day. Now the real point on my swing trading is going to be the above the 10 EMA entry as well. You'll notice that a lot of my swings that I take, I'll always mention it's above the 10 EMA on the daily after reversals. Um, the reversals of a above 10 EMA with a 20 SMA cross as well is also going to be another super bullish indicator for me. So as my trade develops out, I noticed that it was rejected perfectly off that 50 SMA and the 34 EMA. So I was getting a little worried. I also noticed that it didn't really burst through with the RSI 50 there. It kind of just hung around, kind of moved sideways. So I'm thinking, okay, maybe the next day is going to offer a possible pullback or rejection, or this is going to burst through both of them. And so as you progress the chart even more, burst through both of them on here. So that's both of them, meaning the moving averages, the 50 and the 34. But you'll notice the hard pullback. And as you pull down here, you notice that it was rejected off there. And remember how we talk about RSI being pressure. It was rejected right off that 50. Someone wanted it to come all the way back down. They didn't want it to make that type of move. Your MACD was still bullish in the sense that you would kind of be a little hesitant that, okay, you still have some bullish indicators. It did close above all those as well. You're still above the 10 as well, but you're a little skeptical because of the volume that came in there as well. It wasn't the explosion that you were hoping for. Progress another day, you're getting rejection off the 20 SMA now, and now you're kind of getting a little worried because it's not breaking through that 50, that 34 again. Um, Again, at MACD is it's almost becoming. I'm not using the MACD as much because of signs like these, the false signals of you when you get a cross. Um, Down here, typically everyone says, that's bullish. You should respect that. But to me, a MACD cross above zero is only what you're looking for in these types of senses. You don't want to put all your eggs in one basket when you see a cross below zero. And then we'll move it ahead another day. Popped over that 50 on the RSI. I can't explain enough how much popping over 50 on the RSI, especially after a downtrend, especially after a huge uptrend as well on these tickers. Um, Once it regains the 50, buying pressures all in. It's great. You love it. Your MACD even went further up. It's open now. It's above all moving averages. And then we're going to progress it one more day. And now here's another indicator that I really like to use too. Things are moving up great. You're thinking, this is a wonderful, you're almost going to get a retest of new highs here, but you have the PSAR lurking right there. PSAR is just going to basically be um, an overall trend shift. We can go into that later, but it's going to give you also support and resistance along those lines as well. But as you noticed, stock went up, our price went up, but there was also rejection on your RSI as well, went down, and move it one more day over and look at the type of move it made. So you had a indicator on your RSI that this was going to make a move down because of that rejection, even though the type of day that it had, you had the PSAR that was looming there, and then all of a sudden the drop down. Um, I believe I got out the day before right here just because I wasn't liking the way that it was moving that day. I just felt uncomfortable. And as you continue on with that, you notice the constant downtrend, back below 50 on there, the possible retest again, rejection, and you move on to here again. And I'm going to open this up a little bit, and let's get it scrolled down. You'll notice that it's following the 8 EMA, or excuse me, we'll call it the 8 to 13 EMA, all the way down, rejection, perfect rejection there. Popped over this first during the day, but came all the way back down to under, and you're waiting for a confirmation close above that again. So as you pull out here, got to reset the chart for a second. So as it popped over there, there's another possible entry right there. So your RSI went back above 50, unlike compared to that intraday spike over here where you thought that it was going to be back in play again. This one closed above RSI 50. You had the bearish cross here. You had another curl in your MACD right here. It's a little hard to see with everything going on, but you kind of get the gist when you're watching this throughout the day. Another bullish cross, and as you get that again above 50, it's another point of entry anytime during the day here. You're not worried here because everything's back up again. RSI is rising, volume is still on the buy side, and all of a sudden you're riding this all the way back up from about an 80. We'll play this safe and say an 85 entry all the way up to 195 or 191 again. That's how you do it. So if I'm playing this on the 1 minute back here, but obviously I can't go all the way back there using a 5 minute chart. So we're going to just analyze it from this point. Um, as you notice on here, the purple is going to be the 50 SMA. You notice that there's rejection all the way across it. You're going to want to wait for a candle to close above that. You'll get that the same down here. You'll see that your MACD never really crosses and explodes over. So if I was playing this, I'm waiting till it puts in a couple candles over that purple line. That'll put me in the entry during the day for the move that goes upward. And then you just play it out from there. And you know your support, you know your resistance. If you're entering this before the day's over, you know that this needs to close above that orange line. Once it closes above that orange line, You get those types of days all the way up over the orange line. It doesn't provide you many false signals. Um, from here, pop it over one day, over, up. Once it's out, even if you did the second it drops down below, um, that is at 184 with an entry at 183. It's still profit no matter what. It's not the entire move. It's still profit though. And then we'll go over here, entry the second it pops over that day, 1, 2, 3, 4, 5, 7-day run up, and it never comes back below that till today. Even if you did that, there's still profit there. And if you scroll back through your chart, let's do that. So we'll just do basically from here. As you just follow the orange line across, anytime it pops above that, you kind of look at your indicators here. You have a bearish MACD, you have an RSI that was falling that day. You don't want to take entry just because it's over that. So then you progress it a little further to this day. You have a curling MACD, you have a MACD, an RSI that was rising above 50 again, and you look at your chart, it's not at that 10 EMA. So you're going to want to wait till the next day. You enter at that 10 as you watch your MACD develop, you watch your RSI develop after that entry, and look how many days you get out of that. You get from July 5th all the way to August 21st until the next day that it dips below that line. And those are the types of swing trades that you're looking for. Those are the types of movements. That's why you play these blue chips. That's why you play these mid to large caps, because just follow that orange line back. You see how it's respected. You confirm it with your indicators. You know, never enter on these bearish indicators. If it's struggling, if it's not holding these levels, just wait for the appropriate entry and you just make your move from there. All right, so now that you have an idea on how I use my charts, how I use my moving averages as support and resistance, we'll go through a couple other charts. We'll show you some other patterns that are clear cut that I've used in the past. That we'll also use just some of my favorite reversal type plays, RSI plays that I really want to show off because I think people kind of just don't have the right idea on how to use it yet for swing trading. So let's dive into a couple of them. So main thing that I like to play, I've come to notice while making this video, I tend to love reversal plays. So here, I think this is one that has been playing out currently. And we'll put this together. Don't worry about the lines right now currently, I'll explain them. As you're watching this, the 10 EMA, the orange right here, and then the 20 SMA right here. As this pops over that on reversal type plays, you have a green candle, you have your MACD that's wide open, you have your RSI that regained right here on 30.9. Anytime that something crosses 30.9 from below that, that's great. That means it's regaining buying pressure to the upside. That's a great sign of entry. And then when I was talking about the 20 and the 10 EMA making a cross right there, today was the whole crazy market situation that happened that led to this red candle. What you want to do though is when you watch this, look at the type of move that it makes over that 10 with an explosion above and then a continuation. If the news probably didn't happen today, you're probably looking at a little consolidation and then a move to this 34 EMA right there. You're probably wondering about what this line was on the RSI. So just a quick overview of it. I'm probably going to make a video on it sometime later in the future. I don't know what yet. But to grab it from all-time highs right here on the RSI, and you're just connecting the next time that it touched that 70 marker, and you're creating a line all the way across and hitting extend right or extend left. After I did that one, you just kind of watch it play out. I had already had this line on here from previous plays, it looks like. I think it was this one back here um, during August. And you'll notice how it respects it throughout. So as this began another drop right there, it bounced right off this line right here. I would say right off this line. If this line was made perfect, it would look a lot better. If it was a little bit more thick as well, you can manipulate it to look like it's anything. But as you see, anytime that it makes a move above this line, it's going to be a powerful move. Anytime it makes a move below that line, it's going to be a powerful move. It can be news driven, it could be just flat out it's below it, but the point of that line, trend line, is going to be that anytime it regains that line, loses that line, that there's going to be a heavy or a big gain or drop. And as today played out from that entry, you still have that line on your chart. Oops, 1 second. Got to redo that real quick. So I had that line way back here and it gets smacked off perfectly right there. I didn't put that on there today or the other day. That's just where it was rejected at based on if a 1, 2, 3, you get 3 lines that are connected that are respected. That fourth line is respected. Someone is playing off of that line or to that line, or there is a resistance there at that point. So these are the types of reversal plays that I love. You have that whole 2010 EMA cross always leads to some great reversals. Let's see if I have another one up my sleeve. Right here. So after the big heavy drop, I'll zoom out for a second. Right there. So as it enters, well, it won't zoom in just yet. As it breaks above the 10 EMA, that would be your entry. The second it does it, that's going to be 646. As you notice that it still holds that line even after a red day. That's how you know it's respected. That's how you know it's played to. Continues up. Now it's at the 20 SMA. That's a point where you need to see how it reacts on level 2. Is there a lot of walls stacking up that's not going to let it pass that? That means someone's playing to it. Or is this just going to keep going? You'll notice that it is right there at the 50 RSI again as it's approaching. That means that there's obviously resistance somewhere on the chart. You also, understand the RSI and how it works is that it is plotting the strength of the stock itself. So as it hit up there, rejected off of it, came down, it's still holding that 34, but it wants to keep moving up. As it keeps retesting that 50 line, your MACD is now kind of looking a little bearish, starting to begin that cross. It's, that's when you kind of, second guess yourself. Is it worth it to be in it? Do I wait in case it pushes above it? It tries to retest it again. As you can see, close right below it, close right below it. And then now you get the news today and everything else that happened, and it just drops back down. And that's how you would play it. If you entered right as this broke above, you're in at 1046, and as you get scared that it's not breaking it, you're exiting. We'll even say that anytime it dips below 7, that's 54 cents that you just got out of that swing. This doesn't need to be home run hits. You want a portion of the move. You're not looking to grab down here at 587 and sell at 733. Like if anybody can, unless you're doing that 80% of the time, I don't want to hear about it. I don't care what your stats are. I don't care what type of move you got. You got lucky. It's not skill. If you're grabbing this move right here, you know, an entry right here at 645 or 646, and you're selling at 7, you win. You got a green trade out of this. That's something to be proud of. People are just mad that you got money on this trade because they'll come at you and you'll say you didn't catch the bottom, you didn't catch the top, you only got 46 cents. Well, you know what? You walked away with money, and that's all you're doing as a swing trader is capturing part of the trend. So another type of pattern that you can really look for too, cup and handle breakouts on the daily. This one is just textbook is exactly what you're looking for. You don't even need to look at your indicators for this type of play, really. You have your line that's drawn right there, all the way across to kind of give you a good, clear definition of what that is. You have a giant cup right there. You have the handle, and the second it breaks above that, even though you would think, the second it breaks right here, you want to play it safe and you want to wait for that 200 SMA break on that as well. So as it breaks above, you're still in this trade, you're still in the trade. Your RSI is looking great. It's second it breaks above 70, you're going to be loving that as well because that's going to be a huge explosion. But you're writing this from 848 up to 942, and that's a dollar trade on an $8.46 ticker at the time of your entry. What more do you want from a swing trade? There's also another one that you could do. Um, let's see here. We'll do a penny play. It's AMPE. You know, before this run up here, this is what you're working with. It's not a lovely chart. When you look at that chart, you're not looking like, oh, I'm for sure gonna get a big gain. Like if I just enter here at 56 cents, I'm gonna get it all the way up to $2. There's nothing in the chart that's telling you that I can do that. Now, when you get this right here, as it begins to break out, what you want to do is you have multiple different types of formations that are forming here. So what I would do is make it the easiest one possible. And we're going to switch tools here. And we're going to draw a line directly across, right at that high. And we'll go back before it runs up. So that's what you're looking like at your chart before this run up. But you really even go back a couple days just in case you were playing it before. You have your bearish MACD. You have a downward trend on your RSI, even though that it's traveling sideways. You're a little scared because of just how everything is moving. You're going to be using your RSI there to gauge, the next move. If you're seeing that this day, it's getting rejected. It's not. It just keeps falling. It's not breaking above that 134 mark. You're going to progress a day. You're noticing, okay, it's going to retest that line soon. Your MACD is still bearish. It's found support. It's still riding that 10 EMA. All of a sudden, though, it's closing above it, but it dipped below it a couple of these days. You have your 20 SMA as support there as well. So you're hoping that, okay, it's going to bounce there. You keep progressing, keep progressing. You're going to hold it right here. It dipped below. It's testing that 20 SMA as support. It found support there. It's not going to want to go down below there. You move down here. Your MACD is beginning to cross. That's another great sign. So you have two bullish indicators here. It's found support. It's nearby. It's not that far away. Your RSI broke that trend line, which means now it can move back to the upside. Volume isn't that great, but it's still there. Progress it a little further. Now it broke underneath. You're a little worried, but you know that you got the 20 SMA as support. It found it. It's still there. That's not that big of a loss. It's a 5-cent loss currently. Move it, keep moving across, rebroke again. Again, these are not the most perfect lines either, so if I'm making this perfect, if making it wider, thicker, thinner, it's finding support along that line. Doesn't need to make giant moves below or that. But as you continue to look up, your MACD is now opening up after these past couple days. Still respected the 20 because it closed above it, even though it dipped below it. Opened up here right below it, came back above, and now that's when you want to get in right here. Here, we'll go back a couple days. MACD is already ready to cross. It's ready to go. Your RSI broke. That's your first key. Volume came in. You know that this is going to be trying to retest there. Somebody wants it back up there. Keep progressing it. RSI continues to go up. MACD is now crossed and opening up. It tested that level, came back, broke it for a day or intraday, came back down, closed right at that level. It's another buy point this next day, opens up above it. And now the thing on the RSI that I really want to talk about that I think a lot of people just don't understand is that 70 or whatever one you want to use, 69.1 is your absolute friend when you're swinging. And for multiple reasons. Everyone says it's overbought, it needs to come back down, this is horrible. You know, People are crazy buying at these levels, but when it's at that level, buying pressure is huge. It means it's powerful. It means buyers are in control to move this to whichever way they want to do it. So as this breaks above 69.1, look what happens. Your MACD opens wide up as it continues forth. Huge explosions. Everyone's noticing it. Everyone noticed this trend that it broke out here. It had to choose. It's either going to break above this or it's going to fall back down below. Your RSI told you that it was going to continue upward. Your MACD told you it was going to continue upward. Even on these red days, look where it found support, right at that trend. People are playing this trend. That's how they do it. And even if you're following this trade right here with that entry right there, you follow that 10 EMA all the way up, you're still never out of this trade because it never closed below it. And if you're strictly just playing this because I'm not going to sell until this breaks it under the 10 EMA for some odd reason, But if you're just strictly doing that, your entry's at 118, you sold at 161. You know, on a penny play, that's a huge move. You know, you can sell on multiple levels on the way down. These are the types of plays that you love, that you continue to just search for them. No one is forcing you to play a bad play. You can play the plays that you like. What is another one that we could do here? We did our reversals with PBI, cup and handle with LXU, our ascending triangles with AMPE. We could do, how about these ones? So we have BZUN, and let's just plot this from here. So we'll go from pre-breakout. Yeah, let's go from pre-breakout. Okay. So we'll start right here. All right, so where we're going to play this from is right about, well, let's plot this. So we're looking at this trade prior to this move right here. So what we wanted to do is we're seeing this play on that little run up right there. So we're going to go all the way back here. We're catching this right now on our charts, all on our scanners. We're going to play off the RSI. So draw your trend lines. You're grabbing it from RSI highs. Notice how it corresponds with that trend. It's not breaking above, even though that this is going sideways or down and sideways. So you're waiting for that. You have a bearish MACD cross here coming up. It's above zero, knowing that, okay, this could come back down. We'll progress it along a little further. And notice what happens next. These next couple days, it broke above the RSI trend line. That's going to be your entry. Because notice it closed right at it, above it. So a new trend is forming. Your MACD is bouncing off of that. That's a great sign right there as well. So we'll progress it a little further. Still holding those moving averages, even right here as it dipped down below. You have this little wick, but it closed right at that 34 EMA, held the 34 EMA. That's your support. That's where you know that I call low risk, high reward type plays. And everyone says there's no such thing. There's no such thing. Well, there is, and it's called this. Is when the EMA, the moving average, is that close, and you're having bullish indicators on all fronts. So the second this breaks over this day right here, 6:30, you can tell the difference right here as all of a sudden the MACD begins to open up. It's holding that 10 EMA, 20 SMA as support. You have your out, we'll call it, at the 34, which is at, we'll call it 2090 there. And this play was at 2170 that day. So it's a dollar loss, we'll call it even, if that came back down to that level. So, but as this breaks over though, and RSI power pressure, however you want to interpret that, is regained, you are feeling super confident, your MACD's open, and just look at the type of move it makes with all these indicators that it's showing as well. Now we'll pause it right here. You have here, we'll even do this. We'll just, someone's playing this, you have your cup handle, you can have a inverse head and shoulders type thing going on here. It doesn't need to be perfect. It can just be what people see. So as the value or the stock price continues to rise there all the way up, all the way, it's just you're playing off of that 10 EMA. There's no reason to sell whatsoever, regardless of this red day, regardless of all these candles. It's traveling above that overbought quotation marks area that everyone's so afraid of, and it traveled at this area on July 6th all the way to a whole month at overbought. All of a sudden, getting that selling pressure, it dipped below. I like to say anytime it dips below 69.1, that's a great reason to sell. It's lost buying pressure. It's coming back down. Look, you have your bearish cross on your MACD as well. Dip below there at 31.85. From even if you wanted to do from this pattern breakout 23.5, but we're going to go from where we said it would take off with that RSI trend break, the MACD opening up at 22, we'll call it 22. 22 all the way to 32, a $10 swing. Those are the types of moves that you want. Say you're still in this for some reason. It breaks through all this. It has some huge dips. You can throw in a 50 EMA, you can throw in a 100 EMA, you can throw in a 200 EMA to see if this line is playing to it. You just want to see which of these it's playing to. As it tries to break above, it got rejected off the 34, coming back down, it broke above on this reversal type play. The 10 EMA respected off of the 34, 50 EMA right there, smacked right off of it. It respects it. It came back down, but still closed above that. Actually, we won't zoom in. So you're back in this because of that bullish MACD cross. RSI support was held from that one line that you drew all the way back. Look where it bounced off of. Like, tell me who does that. It's great. It's wonderful. It's respected. You'll notice that once you get good at drawing lines, I'll make another video at it, that it's just going to respect those lines so well. So you're back in again as it breaks above the 10, bounced off that one line, all the way back up again. So what is that? That is a $28 to $40 swing. That's another $12 move that you just got on that. That would be from June to September. You could have got $22 in movement. Notice that it found support around the 50 SMA there. Keep moving. Finding support on the 34 EMA. Keep following your lines. Look how long this stays in a downward trend based off that RSI high that it made there. Connecting it to the next time that it broke above 69.1. It magically got rejected off of this line. You just had to extend it right the second that happened. Rejected there again. Notice how it finds support along the 100 SMA there. And notice how as it finds it there, it bounces off this long trend line all the way back. That's from a weekly standpoint. We can teach that later. Continues to ride it, continues to respect it, gets all the way past this point again. Once it breaks above, it makes another move, and then ER hits, and it comes all the way down. So now you're playing the same trend, and look where it's at again on this RSI. We have this one in consideration. We have a crossing MACD. We have it right here. We have the 200 SMA at 20, or excuse me, 200 EMA at 26. You can kind of guess what you're going to want to do. You're going to want a little bit of confirmation before you get in. You can wait for the 10 EMA to drop. These are just the types of moves that you can wait for on these, the types of plays that you can wait. But now you look at it from an overall standpoint on your chart, and you have a head and shoulders pattern. Draw that down, and now you need to wait for the trend to break because this was the drop after the head and shoulders pattern. So it needs to confirm a new one before it can break out of an old pattern. We can go over a ton of charts. We can go through every single chart there is out there, and this all boils down to is just forgetting what's happening now. Look what happens in the past. What does it respect? What does it do to those lines? Does it respect a MACD cross above, below zero? Yes, no, yes. You just continually backtrack this. You create a game of probabilities where 7 out of 8 times it crossed on the MACD for a bullish side. It respected and went up from that point. That's a great odds there. So then you draw your RSI trend lines. You see where it's at. Does it break above? When it breaks above those RSI trend lines, does it make big moves? If it doesn't, it's not a line that's respected. No one's playing off of that. Does it break out of these chart patterns? Everything can be boiled back down to just using historical analysis on all your swing plays. You don't need to overcomplicate this. You add these lines onto your chart. You add your 200, your 100, your 50, your 34 EMA, your 10 EMA, your 20 SMA, and you just follow those lines back. You see, if it breaks above that line, what does it do? How long does it stay above that line? What would be a sell signal above that line? What would be a way for me to stay in this trade? You don't need to overcomplicate this. There is not a golden indicator that will make all your trades perfect. If no one's using your indicator, then you shouldn't be using your indicator because you're going to be the only one playing off your indicator. You know, just follow your lines back. I can't say it enough. Like everyone always overcomplicates everything. Swing trading is easy, it's slow, it's a chess game. Just play it accordingly. That's all I really got for you guys today. Um, I tell everybody if you're swing trading, this is a game of patience. If you don't have patience, swing trading is not for you. Maybe it's momentum, maybe it's something else, but this is a long game. It's days where you're in the same position. It's weeks when you're in the same position. It could be even months when you're in the same position. This is something that you have to understand and you have to just watch it play out and you have to trust your indicators. You have to trust your plan that you made before you jumped into every trade. You need to make sure that you have clear entry points. You need to make sure that you have a sell signal before you get in the trade. You do not just go in hoping that this goes up. You need a point, a visual point on the chart that says, I will sell once it hits this point or it goes below this point. You know, there's a lot of different time frames that you can confirm those points on. Like I tell you, I use the daily. I use the 5 minute for entries and exits. If I'm playing this chart and this is coming back down to that 8 EMA, I'm seeing how it corresponds with the 8 EMA on the 5 minute. And if it dips below, it dips below there. And all of a sudden, everything is just bearish on the 5 minute. I'm out and I just accept it. And I can always re enter the next time it goes above that. Um, you can use the hourly chart. Weekly is great when you're planning long-term trades. A few of my positions that I had planned, I did completely based off of RSI and the weekly, and those are the only two things that I use. I'll go over those in another video. It's a great tool for if you have a busy life, you have kids, you have a job that doesn't require requires you to be away from the computer. There's a lot of tricks to it, but you can use any time frame you want. Um, Make sure I had a lot of questions when I was originally teaching. Um, Anytime you're working from the daily, it's a daily candle, and then the 1 year time frame. There's a couple people that may have thought that um, a weekly candle was meaning only looking at a week time frame, so only 5 days. So make sure you're getting that right as well. I'll whip through any of these especially when I'm planning something that's on the weekly. I'll be looking at the monthly as well, the 20-year monthly, and plotting from there. You'll notice that it's great as well when it comes to these longer trades that are on BZUN here, the month-long run-ups. I was definitely looking at the monthly during those times. But if you have any questions about any part of my strategy, how I use it, if you want any help in general, I'm very open to getting messages any time of day and night and trying to help anybody out that I can. You can find me on Discord. I'm in multiple rooms. You can find me on Twitter. The Twitter is MessiahTheories, all just one. Just hit me up if you have any questions, and I'll see you next video.